good morning, everybody. Happy Wednesday. Welcome to the morning show. This is Stock Market TV. Spencer Israel, Steve Strazza, JC Parets maybe will join us today. We're not quite sure. He is either on his way to or already at the airport, as we mentioned. JC and Steve are speaking tomorrow at an event down in Miami. Speaking of which, due to that, we're not going to have a show tomorrow or Friday. But have no fear. If you hop on over to our channel at this time tomorrow, there will be a special pre-recorded interview that Steve and JC did last week with someone who they've been wanting to talk to for a very long time. And they talked to this guy, and he's a legendary figure in our world. And they talked to him for, I think it was like an hour. So we'll air that interview tomorrow at this time. But I got Steve here with me now. So I got Steve, I got Alfonso, I got Charts, I got you. Today's guest, Craig Johnson from Piper Sandler. Looking forward to that. As always, he is great. So let's get this show on the road here, shall we? We shall. What up, sir?
How we doing?
Oh, we're doing good. We're doing good.
Wow, Strazza show today. So
yeah.
This is a special one, everybody.
So also, I should have mentioned it. I didn't. You may have to dip out early as well. We may end the show early because you have to drive up to Miami, right?
We're cutting out early. I got a traffic situation down here. I was even looking at flights when I woke up this morning, trying to change my mind, because if they do road work on this overseas highway, it's like 3 hours drive turns into 6.
Danger. All right. Well, we'll talk to Craig, and then we'll dip out early.
I'm good.
But we have things to talk about. So
we do.
Always. Not worried about that. We just had CPI, by the way. I don't know if you saw that.
Spencer, I wasn't supposed to mention the name of the person that we were interviewing.
I mean, you can. I guess you can. Do you want to? You're free to.
No. I mentioned it maybe on Chart Request Live or a couple others. Like,
yeah, I know.
Okay.
Yeah.
I'm always saying things I'm not supposed to, right?
That's fine. It's I was just trying to drum up some interest and make it a little bit, tease it a little bit. But yeah, it doesn't have to be a secret. But anyway, so that'll be tomorrow morning. Right now at this time, we won't be live, but we'll still be in your computers.
And honestly, it was great. The interview was just such a pleasure, and you guys will all really, really enjoy it. And this is just one of the legends of our field. So ultimately, we interviewed the master interviewer. There's your hint.
That's right.
All right. Do you want me to do a market rundown thing, or nah? I think we
well, let's see. Has anything happened with the CPI print? Like anything interesting with the market in the last couple of minutes? Let's take a look. See.
Let me see.
Yeah, I would say so. We have ourselves a little bit of a reaction here. So why don't I give you the numbers for the CPI? And
not a good reaction.
Yeah, generally speaking, going down isn't great. So CPI month over month for March came in higher than expected, 0.4% versus a 0.3% estimate. That 0.4% number is in line with where CPI came in last time around in February. So for everyone that's in the sticky inflation camp, here you go. Here's an arrow. Here's an arrow for your quiver. Year over year, also higher than expected, 3.5% versus 3.4%. Core was a little bit light, so most of the stickiness is due to food, energy, and food. But there you go. So sticky inflation, higher for longer, right?
So ultimately, yeah, it's getting hot out here, is what Spencer's saying, and you're seeing bonds tank as rates react higher to this CPI print, and obviously stocks falling too, right? We talk about that on here. It was a question I tossed out to JC, I think last week. Hey, if we don't get these rate cuts, does that kind of change everything? right? Do we no longer want to be buying these stocks? Maybe even not the ones that do better during rising rate environments. So I think it's time we start thinking that way. The data keeps coming in and supporting no rate cuts. And the markets, the charts have been supporting that and been saying that for many months, even quarters now. And a lot of times that's what it is. These Fed fund futures, we were laughing about on Spaces yesterday. Not great. Not the best track record there. So
I guess I can't speak to that. Although I will give the Fed fund futures credit because it has been saying a cut for May is basically off the table. That's what the Fed fund futures have been saying now for a little while. It's not so much about May. Maybe it's about June or July, right? Or even August. Or no, there was no August, September. But
it's the whole year. They're still stacking too many in this year.
Sure. I mean, I'm not saying that's wrong. But this is probably the last major data point before, because the meeting is May 1st, right? So I think this is the last major data point we get before then. So
yeah. There's a comment in the chat. CPI is up because of crude. Yeah. Commodities. So I like to take inflation expectations and overlay them, not with crude, but gasoline, very similar. Gasoline is more consumer facing, drives the CPI more. They overlay so well, right? So it would be very unusual for inflation to peak and roll over here as gasoline is reversing higher. You're not going to see those go in different directions. It'd be very strange. I'm not saying it's impossible. Mathematically, it is possible. It's very unlikely. And commodities are not just ticking higher in a big way, but breadth has expanded in the entire commodities complex. Commodity stocks are now working. Things like silver and gold and even these base metals charts, we're talking about them on here every day. The evidence is becoming overwhelming, indicating or suggesting to us that commodity prices like gasoline and crude are rising.
And
inflation.
Look, and credit to you guys. You guys have been pounding the table on why rate cuts for, I don't know, a couple months.
Yeah.
But it does seem like everyone else has started to catch on to that. I'm seeing it more and more.
Yes.
Why rate cuts? Great question.
What do the crypto people say? When moon?
Yeah. Well, that was my inspiration for that.
Yeah. So stock market people, when cut?
When cut? Yeah, and you guys have been saying when cut? Not now.
Not now. Not anytime soon is what we're finding out today from this CPI print. So
yeah.
We'll find out more as the year goes on. But again, just watch interest rates, watch the bond market, watch the stocks that are working. The stocks that are ripping are the ones that rip when rates are moving higher. So the evidence is becoming very, very, very clear. So we'll see what happens there. Coming into the year too, Spencer, we said it. The biggest surprise this year is going to come from the bond market because we were stacking all these.
That's what you said.
And we said that if there is one way to be super offsides positioning for this new year, it's betting on all these rate cuts, right? We didn't see it then. We're not seeing it now. And we're 3 months in, quarter down. So I think this will be really interesting to continue to kind of track as a theme throughout the year.
You said the bond market, and then we also talked a lot about energy at the turn of the year.
Yeah.
And
both surprising people.
Both those things have kind of come to fruition. So
my favorite quote from Mr. Jesse Livermore is, the market is designed to fool most of the people most of the time.
Most of the time.
You're not going to look at something in the beginning of the year that is just so well advertised, right? And so obvious, and everybody believes it's going to happen. If you see something like that, be so skeptical because it can't be that easy. It's never that easy. And you always want to kind of second guess it when you see something like that.
Sometimes it is, but usually it's not.
Yeah.
And when it is, that's concerning too, because then you're like, wait a minute.
When it is, it's not an ezy trade either because you're sitting there like, this is too good to be true the whole time. So
yes.
I'm down to talk emerging markets, do a little state of the markets, maybe talk a little crypto, bipto. And then I know we got Craig Johnson at 9 o'clock.
I got some stuff on my list. We had Delta earnings this morning. We had We had some news from Moderna.
I
I
will do
want to send
news.
me. All right, let's do state of the markets now, though.
You understand the markets first?
Yeah,
Okay.
let's do that.
Okay. So, speaking of secular trends here, right? What's a
Hmm.
secular trend? It's a trend that seems to never end. On a relative basis, we've had some really big ones. Our whole careers, Spencer, definitely your whole career. Uh, what have the big relative trends been in your career?
There's only been one really in technology.
Tech outperforms every
kind
year,
of,
right?
kind of the
First,
big one. I guess there have been others, but that's the one that comes to mind.
how about U.S. first world?
Sure. Yeah. Okay. There's two: U.S. and world. Yeah. Why?
Growth.
Why even bother looking at any other country? Because the U.S. is so much bigger and better and more
Yeah.
awesomer than everybody else.
So these are two common traps, right? And they've
Yeah.
been good traps to fall into for investors. Last time I did a money show presentation, actually, I was talking all about commodities then too. This is 2 years ago, and someone raised their hand at the end and said, "Why would I care? Why would I even care about any of these stocks? I've been investing in the Qs for the past 10 years. I outperform everything. I'm never going to buy anything else." We
It's a
have
question I have asked myself.
yeah, and it's a fair one, right? Like we have investors and traders who have been trained to think never ex-US, never value or anything but tech or growth, right? Nasdaq only. Stay away from the Dow, stay away from small caps. And it's worked, but it won't always be that way. Throw up EFA SPY. Let's make this point. Or this is EEM SPY. If we did developed markets versus the S&P, same thing. It's almost like this chart doesn't know how to go up ever. You don't even get like counter trend moves in this. This is since this peaked in 2010, going on 15 years. When does it end?
Yeah. I remember when I first started investing in my Roth IRA. This is a while ago. I threw some VEU in there, which is like the Vanguard All World XUS, and just because I thought that was what you're supposed to do. And
VEU.
then like a few years later, I was like, what am I doing here? Why
Yeah.
did I do this? What purpose does this serve me?
Um,
Um, just
I,
because, you know, it
I'm
didn't.
with you. It's listen. It's the prudent thing to do. To mix it up, go a little outside the U.S., do a little small caps, do a little value, right? It's the right thing to do. Just hasn't worked. So we continue to look through our international chart books and global index chart books and ask ourselves, is it time to start allocating more overseas? This chart doesn't tell the whole story, right? Throw up, let's look at EEM absolute. We like buying these trend reversal patterns. So this one right here looks a lot like the things we've been buying. It's just not through the gate yet, right? So 43 gets that done for EEM. But if we now remove one component country from this index, it looks so much different. So now emerging markets without China.
Mm.
Wow. Okay. So that's not the ratio chart. Ratio we are just looking at had China in it. Things look a lot better when you start picking and choosing the countries that you want to include in your analysis, right? So there is something there. There is stuff that we should be paying attention to. There are investing opportunities overseas. There are bullish chart patterns breaking out, really nice setups that we can get involved in. I think it's time to start thinking more and more that way. I think these ratios do eventually turn. I think a world where we're up here talking about energy, commodity stocks, industrials, financials, tech, losing that, relative strength, losing that leadership that's been there for so long. That is a world where we expect ex-US stocks to pick up the pace and really start leading. Right, so we're expecting that ratio to turn. We're front running it, looking at all of these regions and countries around the world and trying to pick our spots. Throw up emerging markets, small caps now. And if we have frontier markets, I would love to show that one, because what this speaks to is whether they're emerging market stocks or frontier market stocks, these are the riskiest stocks around the world, right? If you are saying, okay, I want to stay invested in equities markets, but I want the riskiest ones. I want to go out as far as I can on the risk spectrum. What are you doing? You're going to buy like Mexican or Argentinian small cap stocks, right? going way out on the risk spectrum to these emerging countries, and then the small caps or the beta stocks in those countries, and that's the most juice. So when you see frontier markets or emerging markets, small caps breaking out of these beautiful bases, EEMS already climbing up the right hand side of this base, almost back at those prior cycle highs, it speaks to risk appetite. It's a very offensive tone, right? The global equities landscape. I wanted to just share a couple that stand out. Throw up the individual countries now.
Offensive outside the U.S.
Yeah. Throw up the individual country charts. What do we bring? India. Well, do FM now. FM is in there. Fonz is such a chart ninja. Every time I look at the deck, there's more charts in it. Do the FM quick, and then we'll do the individual countries. So depending on who you are, right? We have some people come to us. Hey, I want a country ETF. Other people, I want actual diversified.
What is this?
This is frontier market.
This is frontier.
So a lot of Vietnam. So I'm biased. Big fan. Do you recognize this chart structure?
Yeah, it looks like EM, doesn't it?
Yeah, it's the same one. It's the same pattern we've been buying. Year and a half now, 2 years, right? So these stocks are now on our radar. They check a lot of boxes now. We can dive in, look through these universes. When we do, some of the strongest countries are India. India really stands out. It has been such a huge beneficiary of China sucking for so long, right? So flows just continue to move out of China into India. And the weightings actually have changed massively. China used to be like 40%. India was, I think, less than 10. They're almost close to par in terms of their weight in EEM now. I don't think that lasts. I think you probably get an unwind back in favor of China, or at least back in the other EM countries. India, from a valuation standpoint, is like NVIDIA at this point, right? Their market's really been bid up because of these flows. And I don't love it here, but the chart looks great if we're above 50 all day. Mexico also really stands out. Maybe Mexico stands to benefit from that theme. I mean, look at this base. This is one of those energy bases, right? This looks like XLE. Looks like gold.
I'm trying to look at the flows. I know the flows into India have been heavy. Let me look at the last like 3 months. No, the last like 6 months. Oh my goodness. 2.28 billion in net inflows into INDA.
It's a lot. Our friend Todd Sohn has been all over it. But I don't know. Maybe it lasts, maybe it doesn't. But it does stand out. Just the way that gap between India's and China's weighting has really narrowed. But there are other good opportunities in EM. Mexico's one of them. Throw up Taiwan quick. So really, this exercise is simply to say this is the way we should start thinking, right? We have more options than just U.S. equities. Okay, Taiwan maybe breaks out of this base. 50 is a good level to get involved. Again, if you find a country that you like, you see the reversals in, you could pull up all the components of that country, right, and go with an individual stock. And China continues to be a problem if you just want to throw up FXI real quick to wrap this up.
You know what's funny is I've been here, talk about China, and then I'll say what I'm going to say.
I mean, look at this thing. Range bound for almost 20 years, coming off the lower bounds. There's definitely a trade here, right? From a longer term trend standpoint, this is as ugly as it gets. Could you trade the range all day? Go for it. We have been, right? Can you pick the strongest names? And maybe you get a counter trend move from China and the leaders lead. And yes, very tradable. But from any sort of long-term primary trend perspective, nothing here, right? China continues to weigh on all the global equity indexes for the most part, particularly EEM.
I'm glad you're talking about international because I've been like lamenting the past couple days or weeks and just how slow and boring and like the US major indexes have been. But like how spoiled are we? Are we, right? Like I've been lamenting that the S&P has been boring. It's up 1.6% in the last 4 weeks.
Yep.
That's pretty good, man.
It's great. It's really
Like,
good. And
that's pretty damn good. And and so it might be off its highs, but still, the
even,
Nasdaq's up 0.8%. Like,
yeah.
pretty good for a 4-week stretch.
And you
That's
know what
10%,
else? You say
10% a
it's
year.
boring. You say it's boring, but Spencer's boring's good. If you're
Yeah, also
boring is
true.
what you want, right?
Also
Uh,
true.
remember 2017? Like just
Yeah,
literally like
that
over
was a
20.
boring year.
Yeah. So give me more boring.
It's
Bulls, you
true.
want the boring. You want the
Yeah.
boring. And one thing too, if we're lower today, and we haven't even opened.
Well,
So
yeah.
JC's not here. I could say these things, but I could start to talk about the candles that aren't even candles yet. So if I'm looking at the pre-market candle, um,
Nothing
Greg's
wrong with that.
yell at me. What?
Nothing wrong with pre-market candles.
So if I'm looking at the pre-market candle of SPY, or I really should be looking at futures, but whatever. Another big red day. We're right around the lows from Thursday. Do you remember Thursday? Big spooky bearish engulfing candle.
And Friday for that matter.
That's right. So we got a little range here, right? Very, very, very short-term range. Momentum has been waning since good God, December. We do have a very long 4-month momentum divergence, potential momentum divergence in place in a lot of these indexes. We had that bearish engulfing. Then we came in Friday, reversed it a little bit with a green day. Then we had 2 more green days to follow that, but with no oomph, no pizzazz. Didn't get back to the pivot highs, didn't make a new all-time high. Now rolling back, it's something to monitor here, right? We've been saying we need a corrective wave, whether it's materials, energy, financials, even tech growth, like some digestion, a little consolidation. We haven't had a nice correction since last fall, right? Kind of slow and steady higher since October of last year. Maybe this is it, right? Maybe it's starting here. So I'm very interested in how these things close today. Unfortunately, I'll be stuck in the car and won't be able to watch the tape.
And there wouldn't be anything wrong with that, because corrections are normal.
So when can I get a Tesla and it can drive me, and I can have my little iPad screen on my Tesla, and I can chart while I'm on the road? Like, is that a thing yet, Tesla people?
I can't speak to that. I do know that you can trade. What is it? Is it trade or
Craig, I love Craig.
you can do something through your dashboard through TD Ameritrade. This is from a couple years ago. I remember them talking about this. You could
In the car.
in the car through your dashboard. Yeah.
Because my Ford doesn't have like a fancy my screen.
Yeah, my Ford. Yeah, I don't either.
But the
wait,
Tesla,
Jason says he does that already.
okay, Jason, ping me. I get a new car tomorrow if that's the case. I'm just got to spend like 4 hours in the car. It's such a waste of time. It is like the least efficient way to travel. You can't do anything. I'm just stuck listening to podcasts that I'm not even paying attention to. It's giving me anxiety. Let's hit the news and get Craig on.
All right, news is
run a bumper.
CPI.
I need a bumper.
You need a bumper? All right, I'll get you a bumper. Here's your bumper. All right, we were talking yesterday with Patrick about airlines. SkyWest was the one that he called out. I mentioned Delta doesn't look as bad as some of the other ones. Delta had earnings this morning. Swung to a profit in the quarter, actually made money. Earnings per share beat estimates. Revenue came in a smidge on the light side, but their forecast was good. The forecast for the current quarter earnings per share came in above estimates. They reiterated their full year guidance as well. Talked about a corporate travel sales up 14% year over year, business travel. So that's, I guess, coming back a little bit. And seemed like a mostly good quarter. Good report for Delta. I haven't looked at the stock, what's doing in the last half hour or so, but
no, they like it. They like it. I mean, this thing, Spencer, this is a great chart. Wow.
Yeah, I mean, it's
about to go. It's breaking out. We're trading around 50.
It's trying. Oh yeah, it's trying, right?
It's actionable there. This multi-year consolidation. God, if you took out the pre-pandemic action, this looks like a lot of the commodity stock stuff we've been talking about, right? Big ramp up off of the COVID lows, stuck sideways, now maybe ready to go again. So, and again, it's charts like these, right? Not just the XLE, XLB stuff, financials. It's charts like these where you're seeing fresh breakouts still, right? That this rotation is so alive and well beneath the surface. What are you laughing at?
I'm laughing at Craig Johnson. This is going to be a good interview. You can already tell.
Yeah, he's hilarious.
Yeah.
All right, so airlines maybe not so bad after all. Do some. No, I won't. What else? What else we got for news?
Moderna had some good news. Their vaccine works for a few more cancers, so that stock was up. Taiwan Semi said that their revenue in March was up 34% year over year.
34?
That's what they said.
This is a huge company. To grow at 34% is just so cool. It's so cool. Wow. Chart looks great there. So see, Taiwan Semi had that big ramp up, and it's still just right here at the upper bounds. Perfectly actionable on a breakout.
Yep.
You don't want to stop buying growth stocks or tech stocks just because maybe the indexes don't look as great as they used to, right? You look beneath the surface, there's still so many opportunities. I was looking at some of these cyber stocks that pulled back yesterday. We were talking about Palo Alto, Zscaler. So there's just a lot of opportunities still in tech. You have something like, advanced micro devices that's just set up really clean against prior cycle highs. So there's still stuff going on there.
It's funny you mentioned those names. Do you know what the sexy headline today is this morning, besides CPI, is NVIDIA enters correction territory. Ooh.
So that means 10%?
Yeah.
Right? Dude, that's crazy that's a correction. You look at the chart. Yeah, that's okay. I thought the big news was Costco selling all these gold bars.
Oh, yeah. Let's talk about that, and then we'll bring Craig on. Yeah. So this Wells Fargo analyst is estimating that Costco could be selling as much as $200 million a month in gold bars, which they've only offered at their stores since like late 2022. Really? Do we think that?
So what are this? They're saying 200 million a month, right?
That's what this Wells Fargo analyst says based on his research.
Costco is an absolute powerhouse. They sell everything. Everybody goes there. And if you're just a normal non-market person and you're hearing all this stuff about gold and you can get gold bars at Costco and you're probably thinking, where the hell else can I get them? Maybe you could order them from a Fox News commercial, but that's sketchy. You go to Costco and you buy your gold bars there, right? Why wouldn't you? And if you were in the market for a gold bar, why not get it from Costco? So I don't think 200 million sounds like a lot more than it is when you think of the size of the gold market. What's the gold market? We were talking about it's like 15 trillion.
Yeah.
So
sure.
200 million, not even a drop in the bucket. Sounds like a lot more than it is. I think it speaks more to the fact that Costco is just going to sell everybody everything forever.
I was at Costco on Friday. I forgot to look for the gold bars. I don't even know where they were.
Because I'm sure they have like the eye stuff when you walk in, right on the left. Don't they have jewelry or something over there too?
You realize that our Costco's are all laid out differently. Mine does not look like yours.
Port Chester.
Okay.
So don't they have the jewelry usually right up in the front?
Yeah, but it's in the front. Sure. Yeah, definitely. Certainly. Okay, it's probably near there. Yeah.
Maybe there.
Yeah.
Next time check and see what it's like. What do you have to do to buy it?
Phil says it's next to the hot dogs. I actually had my first ever Costco hot dog on Friday. I was really impressed. They're really good. They're really good.
Signal. I don't understand. I don't know. I would buy a gold bar. That might be cool.
Yeah. All right.
A gram of gold is like almost $100 now. I think it's like $70 for a gram of gold. I don't know how big bars are.
I also don't know how big the bars are. Let me see if it says here. It doesn't. Okay, whatever. Should we bring Craig Johnson on?
Yes.
All right. Craig, are you gonna have that accessory with you? I hope so.
Oh, is he gonna wear it?
I don't know. Let's find out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh my God.
Steve, you can never get enough charts. Okay, you can never get enough charts.
This is so good. Tell me
Right.
what you're doing right now.
Well, what I'm doing is I'm listening to you guys first and foremost. But what I'm just wanted to say to you is you're talking about not being able to look at charts or trade while you're driving in the car. Have your spouse or significant other drive the car, throw in the AVPs, and
That's
away you go. Keep that productivity rolling.
Yep. You're absolutely right, Craig. Because
Yeah.
who wants to just waste 3 hours driving?
I agree. I agree. You know, when I fly now, I wear these Vision Pro glasses. They're absolutely fantastic for flights. And I'll just tell you, I've been more productive on a flight. Last 8 flights I've taken than I have been in the last 10 years because I can now pull up every computer monitor I have at work, which is about 15 of them. And I can be texting with my wife. I can be messaging with the team. I could be doing all these things and watching Top Gun Maverick right above my head all at the same time.
Dude.
Fantastic.
And
Can I ask how that works? So, like, what do you do with your hands?
Well, you just keep your hands down at the tray table on the airplane, and you just look at what you want, and you just click your fingers. That's all it is. The mouse click has become a click your fingers.
and how are you clicking? Like this?
Go like this. That's all you do. The motion is no bigger than that.
But you don't have to move your hands, like you're not bothering the person next to you.
Oh, I'm not doing this, and you're not doing this or any of these things. You just look at what you want on the screen, click your fingers. That's it.
Amazing.
And
And
Craig,
it's
this is,
simple as
an
that.
Apple, this is an Apple product, so it's probably you're pretty good with the computer stuff and technology, but it's probably pretty easy to figure out, right? And get all your work stuff kind of synced over there. And
So I bought this when it first came out. I've had anybody from the age of 70 plus to about 15.
Yeah.
Try this. Again, the 70-year-old can figure it out. It probably takes them about 10 minutes.
wow.
The 15-year-old takes about 5 minutes. It's that easy. It's again, people look at you like, you're such a dork that you wear these things on an airplane. My wife even tells me you are an absolute dork for wearing these things and you're never wearing them while I'm on the airplane with you. And I said, well, then, maybe you want to schedule a different flight.
Don't sit with me then.
Don't sit with me. Sit somewhere else. I don't care. But
What?
at the end of the day, it's absolutely a fantastic experience if you want to watch movies, if you want to look at charts. I got charts open. I'm just, scrolling through them, clicking my fingers, scrolling through them. It's absolutely fantastic.
That's it. I'm getting one. I've made up my mind. I was going to wait for the next generation, but you think that's dumb. I might as well learn it now, right?
You might as well get on board with it. They're a little heavy to start out with at about, 600 grams or something. But at the end of the or ounces, but at the end of the day, it's not a big deal.
Right.
It's not that you guys are strong. You guys can handle it. And, I'm not going to walk through an airport with them on, but I'll tell you, when I sit in the Delta lounge, because I've done like 1.5 million with Delta, you're talking about Delta earlier.
Yeah.
People look at you absolutely crazy. But here I am. I got a screen this big open. I'm looking at, I pull out a little Bluetooth keyboard, and I'm just happily working away. I don't have to lug a laptop along. I don't have to do any of those kind of things. I just remote desktop back into my computers in the office, and away I go.
This has replaced your laptop for you when you travel. It's
Yeah,
that
for
good.
part of it has, yeah.
Wow. Yeah, that's
Definitely for flying. I mean, you get into these airplanes, right? And Delta has these great blowout numbers and stuff. Guess what? You can't even open a laptop. You can't even open a laptop anymore if you're sitting in Comfort Plus or Coach.
it's too
And
tight.
again, maybe I need to lose some pounds, but
Well, I
at
can't
the end
either.
of at the end of the day, you
Andy, 2 year, you'll rise just 20 basis points on the
Sorry.
day to 4 point.
at the end of the day, you just can't do these things. So you wear the Vision Pros.
And
Anyway.
then you just have your AirPods in for volume.
Absolutely. You can open up 100-foot screen that's on the airplane and watch a movie, noise canceling headphones in. You wouldn't know that you're not at a movie theater. I mean,
Amazing.
the video graphics are 8,000K per eye. I cannot distinguish between the physical screen that I'm looking at right here in my office to the one that pops up in the Apple Vision Pro. There is no difference.
How often?
Anyway.
How often do you find yourself using it for work?
Every day.
Every day?
Every day. I was literally having a conversation with my colleague last night. We were talking about what we wanted to discuss on the morning call. It was probably 7, 8 o'clock last night. I threw on the Apple Vision Pros. I got Teams open. I'm looking at, charts, various chart services. We're having a conversation. I'm going through these pieces, and again, I use them every day. Some days I don't feel like sitting here in front of my computers, so I'll throw the Apple Vision Pros on, open up my monitors in my office, and spread all the monitors 180 degrees around me, and just stand up and work. I mean, it doesn't matter. You can do whatever you want with it.
It's very cool. It's very
That's
cool.
interesting.
It's a little pricey at $3,500, but at the end of the day, technology's changing. I mean, I keep thinking about when Apple brought out the iPad. Who's going to need an iPad? I got a computer. Who's going to need a watch?
Yeah.
Again, this is sort of the first step into a new form factor that Apple's bringing. And by the way, not only is that productivity for work, wait till you watch the Apple immersion videos that have come out. It's absolutely crazy. The new business models that are going to be created there with sports. You're literally going to be able to maybe pay $25, $10, have a courtside seat with spatial Apple video that literally looks like you're there. And I kid you not when I tell you it's there. I get people using the OMG word like 3 times whenever I put the demo on for them and they watch these new videos. It's unbelievable.
Nobody's going to go to games anymore. This is probably their next big thing.
It is the next big thing. But let's talk about markets too. Is that okay?
Yeah, sure.
Okay, number one, you talked about Costco and having your first hot dog there, Spencer.
Yeah.
You're behind the times, my friend.
No, I know. I've had other
can't go to
things.
Costco and not get a hot dog or a slice of pizza. But did you see that Costco just recently is going to be changing here this month that you have to be a Costco member to actually come in and get that hot dog or get that pizza at those discounted rates, because there's, I think, too many new Americans that are showing up at Costco and getting hot dogs for $1.
Wow. I thought you always had to be a member. I didn't know anybody could come and do it.
No.
How about the gas? Anybody could get the gas or no?
Nope. You gotta be a member.
But I think alcohol, right? I think anyone can get alcohol.
I don't think so. I think you got to be a member.
Maybe they used to be able to.
Yeah. Anyway,
it's been a long time since college for me. But coming back to this market, right? We're down 475 on the Dow futures. We got S&P down quite a bit too. Here's how I sum this all up. And Steve, you were on the right path. This market needed to pull back. This market needs to correct. And there's several things that we've been talking to people, and I'll tell you some of the action steps we've made in the last couple of weeks. Number one, the S&P has been trading at the upper end of an 18-month price channel. That's not where you start a new leg higher, number one. Number two, we were trading almost 13 and change % above a very simple 200-day moving average on a lot of these popular averages. When you get to 15%, your forward returns over 4, 13, and 26 weeks are de minimis, and your positivity rates are quite low. Number three is we had the best single quarter since 2019, the first quarter of the year for the S&P 500. It was the 11th best return since 1944. When you go back and look at every one of those years, those top 15 first quarter years, more often than not, you had 1 or 2 pullbacks or corrections in the remaining 3 quarters of the year. In fact, if you had a 5% correction, more often than not that you would get a second 5% correction sometime later in the year. If you had a 10% correction in that first decline, you didn't always get a second correction later on. Either way, you corrected, but you still finished the year higher. This market is due for a pullback and a correction. Not only are those pieces in play, you also had overbought, oversold signals, overbought signals with our oscillators out there for the New York, for the S&P 500. And you also typically get high single digits, low double digit drawdowns in every single presidential election year going back to 1928. So was this market setting up for it? Absolutely it was. What was the catalyst? Well, we'll see how today closes. But it looks like to me that inflation is hotter than people have been thinking. There's been a lot of complacency in the market among the portfolio managers that I regularly have conversations with. They're like, Craig, it's been a great first quarter. Why touch anything? I'm 500-600 basis points ahead of the bench. And until something happens, I'm not going to do anything. Well, something is clearly happening because you had 2.5 rate cuts priced into the market before today's meeting. You're probably looking at closer to 1 after the hot inflation report that came out this morning.
And you're saying for the whole year?
Correct. And so what I think is that you're setting yourself up for a pullback to 4,600, 4,800 on the S&P, and you're going to enter what, Spencer, we've been talking about for the entire year, which is a HLTR, or sort of a high-level trading range. And this market just ends up consolidating sideways. And that's where I think you're playing out. So could this correction last until, sometime in July? Absolutely it could. There's no need to rush. You're going to get these pullbacks, and it's becoming clear that the Fed, while likely still will be helpful, it's probably more of that is getting pushed out further on past the election. So I've had a 50-50 year-end objective, not that I'm questioning it, but that's where my year-end objective is at. And everybody's calling me up like, Johnson, you got to raise your number. You're through it. I'm like, no. Time out. Let's wait for this market to come back. Let's wait for it to retest. It's too stretched on many metrics, and it is clearly coming back and, going to retest some of these levels. I'm glad I did not raise my number like some other strategists have done in recent weeks.
Yep. So you think there's a good chance? I mean, if we end at 50-50, we end lower than we are today, the year.
It's good. Well, let me be clear. It's going to correct. I will reevaluate my target later on in the year, but there's no need to raise it now.
Nope.
Like this market's going to pull back and be below my target is what will ultimately be the case. Depending upon how the election turns out, there's a good chance that the market could be higher, and it could be on more of a sort of lower inflationary expectations as you get into 2025. But I think it's going to depend upon which candidate is ultimately selected. If the current administration stays, not playing politics here on your show, but I suspect there's going to be more loan forgiveness programs and those kind of things, which is more fiscal stimulus that the economy doesn't per se need. I think if there is to be a if there's to be a turnover and perhaps Trump is back into the White House, I suspect that some of those inflationary trends could be down because there's going to likely be less fiscal giveaways or forgiveness loans from that perspective.
So Trump would be disinflationary.
I don't know if the word disinflationary is the right term, but I would say there'd be less fiscal spending and more sort of a fiscal responsibility. Again, the debt level still went up under Trump under his first administration, so I'm not delusional from that perspective. Yeah. But I do think there would be less sort of entitlements, less sort of giveaways.
But Craig, if you raise your price target, you would get all the headlines, especially if you raise the street high price target, then you get all the headlines.
My job is to make everybody here on this show money, not to win a popularity contest.
Okay.
And I'm going to do what is ultimately right. And even though somebody calls me up and says, Johnson, you're wrong, I went too far, I went through your objective. It's like, hey, look, I made the call that I made for the reasons that I made. And until those reasons change, I'm going to stick with it. And my view is that we would enter a high-level trading range in 2024. And we're doing it.
So
it could be today.
Talk to me about how you navigate during a corrective phase, right? So summer of last year into October lows, nasty correction, at least at the index level. Do you more or less just sit on your hands, or are you still picking spots? Because we're still going to have charts breaking out. A lot of the index is driven by growth. They don't have these commodity stocks in them, but they look extended too. So kind of where's your head at on that?
Well, at the sector level, where we've been overweight is we've been overweight financials. We've been overweight services, and we've also been overweight tech, just not some of those Mag 7 or Fantastic 4. And Steve, you bring up a great point that I should have mentioned earlier is about 2 weeks ago, given the fact that we were through our objective, the market was stretched. We thought this market was going to pull back into an HLTR. We did what a lot of people don't normally do is we lowered our recommended equity exposure from 98% to 90%, which is kind of a big deal for portfolio managers. So we're sitting with 10% cash with our So Top Us, Piper Sandler Select Opportunities Fund. We're sitting with 10% cash, and I sold stocks like NVIDIA and VST and a lot of these others. I looked at NVIDIA and said, a 16 bagger is enough, and we're done. And I started taking all these extended stocks out. In our morning notes we put out today, I listed a whole pile of stocks that are at least 50% above their 200-day moving average, and they're just starting to correct. Abercrombie and Fitch would be one of those. Another one would be SMCI. Like SMCI could be at 600 in the blink of an eye, and everybody still wants to chase this. It makes no sense to me. That
How-
is a head and shoulders top, period. No discussion about it at all from a technical perspective. And then don't forget about Abercrombie, Sweet Greens, Supermicro, Dell. There's so many of these companies that are so extended above their 200 days that they will correct. And these portfolio managers have been chasing momentum to a big degree. It's going to be painful for them in the short to intermediate term here. And frankly, looking at today's sort of opening numbers and prints, you're most likely going to start to see some of those names come under further pressure. So, Steve, you asked a question there. Are people going to step up and buy this market today? I'm not 100% sure that's going to be the case because too many portfolio managers have been sort of complacently long, saying I'm on the right side of the Fed cycle. And they still are technically that they could be cutting later this year, but just not to the same degree. And so I think you're going to get some nervous profit taking. And I think this will be the start of the HLTR. Sorry for the long-winded answer.
No, I love that. So it's prudent to raise a little cash, feed the ducks a little bit. If you've been in some of these leaders, they've been great trades. Pay yourself. Don't be greedy.
Correct. And wait for the market to come back to you. I think the biggest trait you need to have if you're trying to trade this market is patience.
Yeah.
You don't have to be in the market every single day, okay, in size. You can trim some of these things back. You can, if you're trading these things, feel free, take some money off the table. Sometimes waiting for things to come to you are some of the best trades. And frankly, some of the best trades I've ever had has simply not being in the market, right? Waiting for it to come back to you.
No position is a position, isn't it?
Cash is king at some points in time, right?
You
And-
also don't have to buy the bottom and sell the top every time. Well, you won't, but you don't, you're not gonna.
It's super hard to do, Spencer. It's super hard to do. And what I say to people is, I don't mind missing the top 10 and the bottom 10, but if I can catch that 80 in between, my positivity rates are going to be huge. My returns are going to be great. And I'm just trying to play things that are trending. I mean, just sort of have the wake-up call. Ralph Acapora would always tell you, a good friend of mine, look yourself in the mirror every day and just kind of be like, is this where you want to be? Have that sort of realization every day. Is this how I want to be positioned? If not, make changes. It's okay. I mean, the trading commissions are so low nowadays that it doesn't really make a difference.
Yep. Commodities. What do you think?
I was on a show late last night, and I just kept pointing out to people, you got a huge breakout in gold. You've got a huge breakout in the CRB index if you put it all together.
Yep.
And my view is the bond market is telling us, I'll get back to commodities 1 second, but the bond market is disagreeing with the Fed right now. The way 10-year bond yields have been creeping up over the last, 30, 60 days in here. And so to see the print today in combination with the CRB breaking out, and inside of the CRB, you think about copper, you think about how much gasoline has gone up, you think about how much oil has gone up, platinum, palladium, all these things are breaking out and reversing downtrends. I guess we shouldn't be surprised that some of these inflationary numbers are sort of hotter than expected. A lot of it had to do with automobiles, just kind of looking at the numbers from a surface perspective. And we'll be interested to see what the producer numbers look like, tomorrow too. But commodities are still hot. The only part that isn't hot are the ags.
Yep.
Wheat still looks lower. Corn still looks lower. So your food inputs are lower, just not the fact taking into consideration energy. Energy prices are up. And insurance prices are way up. They just put a surtax in Minnesota for stolen cars. I mean, again, I got to roll my eyes living in Minnesota here, but now I got to pay more because there's 17 cars stolen a day in Minneapolis. Annualize that at $350 million, and I got to pay a premium because we don't enforce, car theft. What?
That sounds like a lot of stolen cars.
That's a lot of stolen cars.
What the hell's going on over there?
You don't enforce anything. You got a governor that's lazy. You've got a city administration that is clearly not on top of things, and they don't have the police officers, backs. Again, we don't have a society without rules and regulations and other things. And having 17 cars stolen a day seems egregious to me.
I didn't know Minnesota was in California now. That's interesting.
Well,
So-
I mean, it is a state that seems to lean closer to California than Texas. That is for sure.
Commodity stocks in particular, though, Craig, when gold was, it knocked on the door a couple times before it finally resolved this range. And every time it did, we would look at gold miners or even down the cap scale to the juniors or spot silver or the silver miners and say, something's not right here. These guys aren't even participating at all. This time is different. Silver, I'm pretty sure, is the best performing subgroup in materials, trailing 1 to 3 months, really waking up. The worst, shittiest silver and gold miners are ripping. So it seems like there's a different level of support there from an intermarket standpoint, kind of confirming this breakout. Would you agree?
I would agree. And, one of the ones that I like to watch is, Wheaton, WPM on the charts. And, you're making a pretty good inverted head and shoulders pattern here. You just haven't quite broken out yet.
Yep.
Getting a little bit of a pullback today in gold, which surprises me a little bit, given the inflation numbers being a little bit warmer. But perhaps that's a sort of a sell on the news type event as people were anticipating some of these things. But I would expect to see some follow through with some of these miners, whether it's silver, gold, or any of those. I guess we just need to get some of these earning prints out, like Wheaton Precious Metals, is going to put their print out on, May 9th. And they're going to be a big step up at that point in time.
You ever overlay? I'm looking for it. I want to throw this up. You ever look at how tight the relationship is between wheat and precious and gold itself? Here,
I've done some of the work in the past, but throw it up on the screen.
I haven't been able to find a gold stock that's this close.
Yeah, and therefore you need to have. I believe the reason being is because of the hedging.
Is that it?
Yes. Some of these like Newmont, some of these other gold producers, Barrick, and some of these others, they hedge quite a bit of their production ahead of time to control costs. And I will just say that this one, I believe, is probably the least hedged.
Oh, that's great
compared to some of the others.
That's interesting. Yeah. So, I mean, why wouldn't this one look like the one in gold above it?
Well, it should.
Yeah.
It should. It should look like that ultimately. And I will just tell you that, you got earnings coming out. I don't know anything, but if you just look at the charts and use it as a guide, you'd be like, you're probably going to get some reconciliation to close sort of the differentials between the physical and the actual commodity itself.
All right.
So, go ahead, Spencer.
Yeah, no. I was going to ask Craig. So, trading range, commodities. What are we not talking about? What are we missing here, if anything?
In terms of trading range for equities, 4,600 at the lower end, probably 5,200-ish at the upper end for now. Commodities moving higher, Fed cuts getting pushed out, probably higher for longer in terms of the Fed's policy at this point in time. Inflation remains a bit stickier. Again, a lot of uncertainty, Spencer, coming into the election coming up. And if you look at what's working in the market, it's basic materials, it's energy's been definitely picking up as of late. You've been starting to see some REITs picking up in terms of performance. When you sort of put that whole piece together, and I know there's other kind of technically skewed people on this, on this call here this morning. All that looks like it's late cycle. Okay, is what that looks like. And you start looking inside of consumer land, which should be early cycle. And at this point in time, it seems like you're not seeing those companies performing quite as well. And that's where you've had some of the Altas of the world. Elf looked like it fell off the shelf, those kind of things. And it just seems like you're not seeing the early cycle pickup. So I guess what we're not talking about, Spencer, is that this sort of pickup could take longer, and this sort of reaching 2% target that the Fed's talking about could take longer than people think. And expectations are just out of sync with each other, and they'll have to get, I think, rebalanced.
I see what you did there. Elf off a shelf. I caught that.
I try to be cute.
Yeah.
Guys like Andrew Bell that are watching the show today don't find me funny on a regular basis, but nonetheless, great guy. You got to call him out, along with Carter too.
Do you have any expectations for how many cuts we get by the end of the year? Or are you just waiting it out?
Well, if you look at WIRP on our Bloomberg terminal, I'll tell you that it looked like you're getting cuts pushed out now to the September timeframe.
Yeah.
Okay, is what you're ultimately getting. And if you go through and you look at what is priced in right now, I'll tell you that it was 2.5 yesterday. And if I look at the numbers right now, it looks like what is priced in is 1.78. So just under 2, call it 1.5 now, basically, is what's priced in. So again, that could continue to slip. You've got numbers coming out tomorrow, and those numbers coming out tomorrow could further accentuate this discussion as you get the PPI coming out, and then you've got sentiment numbers coming out on Friday too. So put all those pieces together. If it's going to look like the PPI is hot and above expectations, maybe that gets further reduced and this market further corrects in here. But again, I don't think it's going to be a top of the market. It's going to be a consolidation phase to the market and a sort of a period of resetting expectations. And earnings numbers coming up, they're still going up. So I don't think this market is going to get crazy and wildly breaks down from here by any means. I just think you're going to get a better opportunity and a better entry point in the next 30, 60, 90 days.
What inning are we in terms of this bull cycle?
What inning?
Yeah.
I'd probably say you're in maybe the 5th or 6th inning. I think there's more room for this bull market to continue to work. I mean, inflation is coming down. You're normalizing the environment post the COVID environment. I know people are sick and tired of hearing that, but it's literally true. I think about the environment, COVID, post-COVID, everything else like a Super Ball. When you drop it, it kind of bounces higher and then it hits the ground. Then it's a little lower and it's a little lower, and things are just sort of normalizing. And that just flat out takes time. And Spencer, one other thing we haven't talked about is the secular change of interest rates that have taken place. I mean, we have seen a 40-year reversal in 10-year bond yields, okay? And the last time you've seen an inversion of the curve as long as what we've got right now happening was back in 1980, late 70s, early 80s. And that was the last time you had a secular change of interest rates. And I think this is leading to some of the confusion and some of the frustration among investors in the market right now is they need to shift their mindset and recognize two things. One, a secular change of rates has occurred. And second, that these turns in interest rates literally are like turning the Exxon Valdez. The last big rate cycle turn took 5 years to play out, and it's probably going to take that long or longer again for this to play out. And that's what we need to kind of keep in mind.
That's a good thought. That's a good thought.
Before we let you go, Craig, any thoughts on crypto? Anything you want to say about crypto?
Oh yeah, we didn't even ask Craig about crypto at all.
I know, crazy. It's weird, right?
I'm still a huge fan of crypto, as you guys know. I still have some miners, still have those kind of things. I guess my view on crypto is it's getting more legitimate every single day that it goes by. We've now got ETFs out there. Kathy Woods has got some great products out there too. She's got one ARKY, which is 2/3 Ethereum, 1/3 Bitcoin, which is super interesting to me because Ethereum hasn't really played catch up with BTC.
Which one's 2/3? Ethereum's 2/3?
It's 2/3 Ethereum, 1/3 BTC, Bitcoin.
Wow.
Yep. So that's one that could definitely play catch up, ARKY. And in all fair disclosure, I do own it. Okay. But I just find it super interesting. And again, I'm not here to pimp my own stuff, but I share it with all of you. If I like it, obviously, I'm just telling you because it must be decent. Otherwise, I wouldn't buy it. The second part that I would say too is that with all these ETFs, this is what I think people miss, is over the last 2 or 3 years, the best performing, and I'll call crypto an asset class because I think it is, has literally been the best performing asset class over the DXY, over commodities, over equities, over bonds. It's been the best.
Yep.
And with all this money coming into crypto and asset allocators coming back and saying, well, maybe we should put 5% in for diversification purposes, you don't mine crypto any faster. Okay? Because I mine, I understand this. You mine and you make a Bitcoin at a certain rate. It's not going to be faster.
Right.
And therefore, the supply cannot increase at a pace that's going to keep up with the demand for how many spot ETFs have been created for Bitcoin. Therefore, when you have more demand and fewer number of coins getting created, where do we think the price is going to go, Spencer?
That's true. That's a good point. You can't. Yeah, the hash rate is the hash rate, right? It's not.
That's correct.
Yeah,
That
that's
is correct.
good.
So, could you see 100,000 on Bitcoin? I think that's a starting number, right? And then you ask the time frame of what that's going to be. I don't know. Why hurry? Give it 24 months. You'll probably be there.
All right. Wow. Good stuff. Craig Johnson, one of our all-time favorites on this show. Every
Always
time
a
you come
pleasure,
on. Thanks a lot, man.
I got to go back to work.
Dude, that is just the coolest. We're gonna have to clip a shorty of this and put it on the internet.
We will. We
Where-
will.
You know, JC needs a pair of these, you know?
He's gonna be jealous he missed today. You're the man.
I know. All right, guys.
Thanks a lot.
Later, Craig.
Have a good one.
Oh man, that was wonderful.
You know, there's a handful of people who come on here, besides how awesome and fun he is to talk to. When Craig Johnson agrees with me, I feel really good.
Yeah.
People come on here all the time. You know, we have our takes and our positions and our outlook, and somebody might come on and say the opposite, and I'll sit here and just conduct an interview and yeah, okay, that's fine, and not ever think about it again. But if Craig or Todd Sohn or David Lundgren come on and have a opposite take or completely disagree with me, like I gotta go for a walk after the show and like think about my life. So the fact that like I can get through these interview with Craig,
Yeah.
on the same page, I feel good.
Yeah. And to Craig's credit, like you, he's been awfully consistent. He said pretty much the same thing the last time we spoke to him, right? So
One of the best out there.
yeah.
What a pleasure to have him on the show.
all right, let's bring Mary on, and then we'll get out of here.
Mary, let's do it.
Good morning.
How we doing?
Doing well, thank you. How are you?
How was your solar eclipse experience a couple days ago?
Burned my retinas. No, it was good. You know, we had here on the west side of Michigan, we had about 94%
Nice.
eclipse. So yeah, I was surprised. I mean, they say, you know, it gets colder, and it did. Pulled my kids out of school a few minutes early, and we
Nice.
sat out in the parking lot and watched the eclipse because it was right as school was
Wait,
letting up.
you pulled your kids out, or the school let
I
out
did.
early?
Yeah, because, you know, I tried to message the teachers and find out if they were going to be out there, because right as it was supposed to hit, like, I don't know, the fullest eclipse part of
Yeah.
it was 3:10 and the kids get out at 3:15. So my brain is thinking, oh, they're going to be like packing up for the end of the day, and
Yeah.
they're going to miss like the fullest part. So I went to
Yeah.
school early and pulled them out.
Nice.
So,
Nice.
yeah.
All right. Today we've been talking, we've been talking commodities, we've been talking international, talking about how spoiled we are, the US markets. Where's your head at right now?
Yeah, you know, it's kind of in the same place that it's been the last couple of weeks. You know, been looking a lot more at the commodities and the energy and the materials, and yeah, I already feel like I'm pretty heavy now in a lot of those spaces. I did get active. We didn't talk about this chart last week, but it was one that was kind of on my mind, and I brought it with me today. CSTM. It was the aluminum one that I was interested in last week. Got involved, and you know, I know that commodity, it's kind of, I mean, it's overbought here. But we were above that 2150, which is where I liked it. And so we're going to wait and see how this closes out today. I mean, right now that the candle looks kind of like a nice little hammer there off the 20. But yeah, so, you know, this is a space that we've been fishing in. We've been having a lot of success. You know, maybe it pull back, retest. In fact, I think we maybe retested it this morning. Yeah, so this is one that I'm involved in. I'm not 100% involved. I kind of just started the position last week. We'll see how today plays out with all the information that's out. And this is one that I like in a space that I think has potential.
I love this chart. Aluminum has kind of risen to the top and terms of subgroup performance within materials, along with silver, some other things. So absolutely, giant base. You could probably play it back to the old all-time highs. Let me ask you, what is your typical time frame?
Oh, that's that's a good question. I do all the time frames.
This one's a little bit different, you know? We're not buying a reversal pattern breakout. This one, I think, would dictate something a little bit longer term and some extra patience. These stocks have been so good for a couple months now.
Yeah.
If they give back a little, that's okay. Like Craig said, maybe you get some a corrective wave here, and then this one carries on higher, later on in the year, this summer, whatever. I think this is like a patience pays kind of setup.
That's good to know. And, that's partly why I only went in with about a half a position on this one. So there's still plenty of space for me to add to it if we do get some corrective activity.
I think that's the move.
Yeah.
Yeah.
Yep.
I think charts like this, anything, energy, materials, any of these names, like buy on weakness in the coming days, weeks, maybe even months. These are going to be some great entries potentially for the rest of the year. That's
absolutely
when I'm buying these commodity stock charts.
Yep. And there's so many great bases. I mean, that's what we love to buy. Buy the smile, right? Otherwise, those are the longer term ideas. The kind of more shorter term ideas, I love to look at the freshly squeezed list that we run. And so just brought the entire scan just because there are so many great ideas. And last night I was kind of making a game plan of, okay, if CPI comes in hot, what am I going to be looking at to maybe squeeze? And if it comes in cool and we, rip higher in the growth, and what's that look like? And so I kind of had two different game plans, and I was kind of looking through all of these names. I know we've got actual trade ideas posted for our members and in rangefinder of setups that we really like, which are setups that I've got alerts on. But I was running through the whole list, and I was pinging our intern Sam last night. I'm like, hey, I heard you say that you're running a new scan. Give it to me. Like, what are you looking at? And so he and I were chatting last night. And this is just a fun one for me because it kind of, resonates with my junkiness of wanting to, get that squeezy move. And, you're not necessarily trading the best companies, but nonetheless, they'll move, and it feeds my junkie spirit.
But we're seeing themes even on the freshly squeezed list now, right? Because we are sorting by momentum in the last column on the right here. All of these names have heavy short interest. A lot of oil and gas. I even see a precious metals name.
There's a precious, yeah.
I see two of them actually.
There's one of those precious metal ones I really like.
This CM, what is it? CRK Comstock recently, also a hot corner name.
Harry Jones.
Same thing, right?
And I love when they overlap with our, services or our scans, and you're seeing things pop up in multiple places. That's a huge, alert.
Absolutely. And I think, even some of these, Carvana been cooling off sideways for a while. That could squeeze in there. Rocket, I've been interested in and involved in, waiting for that to move.
Yep.
I know that you've liked the Tilray MicroStrategy going back to his prior cycle highs right now. Probably pretty actionable right here. So there's a lot on this list.
A lot of good stuff on this list. And yeah, like I said, I haven't been really active yet. I've got a lot of alerts set. And so we'll see, what fires, if anything fires today. But a lot of potential setups from this list that I'm excited about. So we'll see.
Love it, Mary.
Yeah. So that's what I've got for today. For the Strazza show, this is the first time I've been on the Strazza show.
Really?
I'm pretty excited about that. Yeah. We've had, JC leave early for, I think it was pancakes a few weeks ago. But like the Strazza show, this is a first. Right. So
this is a big moment for you. Congratulations.
Thank you. Congratulations to you, sir.
I'm very well. Thank you. UConn Huskies, right? I'm very happy for us. Your Michigan, my Huskies. We're just dominating the NCAA this year.
That's right. We got Mary in the football.
Yeah. So
basketball.
Who's got the team for baseball now?
I don't know. Some team in the South.
I don't really watch baseball.
Well, I mean,
Michigan hockey's going pretty well.
Like in terms of professional, I mean, my Yankees are best record in baseball. I'm just saying. So,
did you see they had the greatest of all time, Mr. Michael Francesa, on the compound? I mean,
I'm not his biggest fan, so I'm going to skip that one.
You're a Francesa hater? A lot of those where we grew up. Right?
Yeah. I'll skip that. I'm okay. I'm fine. All right, let's do some recessing.
Hold on. Yeah, run the bumper. I want to talk about this.
All right.
So yeah, I'll be listening to the Francesa podcast. This is the guy who, growing up, I had to listen to on the radio every morning on the way to school or anywhere my dad would drive me ever. This man was just screaming in my ears. In fact, back then, there was another guy with him called the Mad Dog, who he had this voice that would just pierce through you. And I would just listen to them all day, every day. And it was on WFAN 660, very popular sports radio station, covered all the Giants, Yankees games, all that fun stuff. And they had him on the compound. So I'm excited to listen to that podcast today. My Essa bagels were delicious.
Oh,
2 to go. Throw up the big bank index. So here's what's coming up on Friday. Earnings season has returned. The big banks have some big reports coming up Friday morning. Does this chart finally break out? This is a custom index. It's the largest banks in the United States. It's the largest in the world. So that could be a big catalyst for maybe a breakout in XLF financials as a group. We're watching that closely. And wore my golf t-shirt today because it's Masters week, and I couldn't be more excited. Love seeing Tiger out there swinging the clubs again. Very excited to watch the Masters this weekend.
Very nice.
All right. My recess, I also have a few things. Fonz, why don't you bring up slide 4? I'll recount my story. I liked what Craig was saying earlier about knowing when is enough, right? Knowing when is enough. And JC's not here to make fun of my charts, so I brought my chart with me. The yellow circle is where I bought. The 2 red circles are where I sold. Okay. Now
Trading is easy.
What chart am I looking at? What?
He's got some sort of intraday chart up. Closed-ended fund. This thing doesn't even trade.
So this is an intraday. Yes, it's a 15-minute chart going back 2 weeks. All right.
Okay.
I'm not sure what's hard about that. Okay.
Because JC's not here today.
Exactly.
Yeah. Right. Okay. So my point in bringing this up though is like, did I make the most money that I could have? Of course not.
No, you did good. Yeah.
Did I buy the bottom and sell the top? Not even close. I missed the top by a mile. But still, look what I did. I bought this thing at 11 and I sold at 50. Like, if you can't be happy with that, then this isn't for you because you'll never be happy.
Can you please hit the applause button for me?
Oh, actually, my applause button. I'm getting a new applause button today. My applause button is no bueno. So,
how about the crickets?
Yeah, I can do crickets, but my applause button stinks. So I'm getting a new one today. So I wanted to say that, right? This is not a 15-minute chart, please, people. So 15. There's nothing wrong with the intraday charts. You guys just throw that out there. Second thing I want to say was slide 2. This arrived in the mail yesterday from me, and my dad going down to Omaha in 3 weeks, I guess.
How much were tickets?
Very cool.
How much were tickets? What?
You have to pay for this, or you're a shareholder? You go for free?
You go for free, man.
Wow.
How much were tickets?
They should charge people for this.
They should charge people for this.
I mean, it's a huge event.
It is a huge event.
You need Dairy Queen?
Well, Friday, May 3rd is like shareholder shopping day. So I guess that means that we're good to go and buy all the stuff that Berkshire Hathaway owns, including DQ.
We're going to have Vision Pro there?
That's so cool.
I don't know.
Great,
right?
I'll let you know.
Let us know if you could get a deal. We'll send you an order.
Let you know. Yeah.
I'm getting one.
Yes, yes, T-Man. Any amount of shares. You can own 1 share, or you can own 1,000, and you're still invited. You just have to go and, like in my case, I mailed a form. You have to literally mail it if you want the passes ahead of time. You literally mail something, and they'll mail it back to you. It's amazing.
You know, Warren Buffett still writes letters to communicate.
Yeah, right. Yeah.
Oh, that's sweet.
Awesome. Who just said Matthew's going to be there? Awesome.
So we have to go until 9:45.
You gonna have enough time to get up to Miami?
I mean, I'm gonna get there eventually.
All right.
We'll see
Mary, do you have a recess?
Just a fun little story. No picture because I couldn't get close enough, but I was doing some yard work the other night and blowing leaves out of bushes, and because that's what you do in Michigan in the spring. And I noticed there was a nest down in a bush on the ground. I'm like, oh my gosh, what kind of bird puts a nest on the ground, right? Well, then I went back the next day and I saw a mama mallard duck. So I have a mallard duck nest in my front bush. So yeah, my kids are very excited about it. We're gonna watch, the whole evolution of life play out right on our.
How'd you know it was a
yard.
mallard? Out of curiosity.
Well, because there's actually been a couple hanging around. My son has built a lake in our backyard. That's a whole nother story for another day. But one morning I woke up and there were ducks sitting in his little lake. And I've heard some quacking around the front. And then when I was blowing out the leaves, found the nest of eggs. It was strange to find nest on the ground. So, and then I went back and looked, and it was a little mama mallard duck. So
this summer, you're going to see Mary wading through her pond with a bunch of ducks like Tony Soprano.
They're all going to be following her. Yeah. Yeah.
I've already got my own little ducklings to follow me. I'm good.
All right. So I think we'll hop out early. Steve has to get going, head up to Miami. By the way, if you're going to be in Miami, I'll drop the link in the chat here again if you want to meet up with these guys. They're going to be at the Investment Masters Symposium. The link is in the chat. There it is on YouTube. Check it out there. And Steve, good luck, man.
Have fun. Say hi to JC for us.
I will. Looking forward to it.
And everyone else you see that we know.
We'll miss you guys. We'll miss the show. See you guys.
Yeah, no show tomorrow, no show Friday, but tune in tomorrow at this time for a special interview, pre-recorded interview that Steve and JC did last week. That's what we got. Smash the like. Thanks to Craig Johnson. Thanks to Mary. Thanks to all of you. We'll make some money, all right?
Bye,
Have a good one.
I can't take no loss. I don't even know what it costs.